All right. What is up, traders? What's up, tycoons? Super excited for today's video. Going to give you guys a quick update before FOMC tomorrow, so that way you guys can be prepared and kind of see what's going on behind the scenes with the market and what sentiment is. Now, we're going to cover some of the top news here recently, and the economic events today are actually dropping the market. Okay, the futures dropped today based off of housing numbers and building permits. So we're actually going to take a look at the home construction ETF today. We're going to take a look at the home builder ETF today. All right. We're also going to go over the four pillars. And the reason being is because XHB, the home builders ETF, is one of the four pillars. We're going to break down why that's important. We're also going to take a look at the biotech ETF IBB. There's a triangle forming here, and it's getting very close to breaking down. Now, energy prices have been absolutely skyrocketing. I've been covering the XLE ETF and some of the big energy stock names as well as crude oil, but I also wanted to show you guys an interesting ETF right here. This is the XES oil and gas equipment ETF on the verge of breaking out past its highs. All right, we also have some divergence here between TLT and S&P 500, indicating that the S&P 500 could drop lower. We'll break that down. All right, we're also going to take a look at some of the seasonality projections. Okay, this is a seasonality projection script that I have, and this indicator says that we could head lower. Okay, this is for the S&P 500 futures. Right here, we have the NASDAQ 100. Okay, the NASDAQ futures right here. Also, seasonality projection saying that we could head lower heading into October. We're going to talk about TLT, of course. Okay, the baby TLT. Now, a concept I want you guys to understand is that I think that we're going to go range bound. Okay, we're putting in a little bit of a demand zone down here. We've got two overhead supply zones, an area of former demand that we blew through and turned into new supply up here, as well as an overhead supply up here. We don't know exactly where the range is going to be for TLT yet, but I do think it's going to go range bound. We're going to go over that. And why is when we take a look at treasury yields, right? 10-year is breaking out past its critical level, right? Old support, new resistance, breaking out. 20-year treasury breaking out. Okay, still in a little bit of a downtrend here recently, but trying to break out past its recent highs. And we have the 30-year treasury yield making new highs as well. So we're going to cover all of this in today's video. It's going to be very good. Make sure to smash the like button, subscribe to the channel if you guys are new. I do want to mention I started a completely free newsletter for you guys. It's really great, giving out free valuable content, and I also sprinkle in some free trade ideas every single week. Of course, this was a Tesla trade from a couple weeks ago. Right, you can see the setup, the abandoned baby chart pattern. This is what it looks like in your inbox. And you can see that it played out very, very well. And if you trade options, that was a very profitable trade, right? And of course, Tesla's not the only thing. We're covering many different stocks in there, but this is just the example I've been using here recently. You can always reach out to me on Ko-Fi as well. Ko-Fi is a way for you guys to connect with me. You can come in here and you guys can request commissions for specific videos. Okay, so come to the commission side right here, and this is where you can come in. You can request a specific YouTube video if you guys would like. All right, you can also book a 30-minute coaching session or a 1-hour one-on-one personal session with me directly through the Ko-Fi platform. And if you guys ever feel like it and you enjoy the content and you ever want to leave a tip or a donation, Ko-Fi is a good platform for that as well. You can come in here and buy me a coffee. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, in top news, the Fed is to hold rates steady but signal policy path in the meeting this week. Right, they're going to be kicking off a 2-day policy meeting with officials widely expected to keep interest rates on hold for now, but also flagging in new economic projections whether they feel rates still need to rise further before the end of the year. So we're pretty much, going to get a pause tomorrow. All right, it's almost a guarantee. If we don't get a pause tomorrow and they actually hike, you can expect a complete bloodbath. Okay, the market is not expecting that right now. And really, the big thing is going to be the Fed's tone, right? Are they going to come out with a very hawkish tone? Okay, to try to spook markets, get the markets to cool off a little bit. Are they going to suggest that they're actually going to hike one more time in the later half of this year? These are things we need to consider. And in more news, Instacart is valued at a $9.9 billion as the IPO market rebounds after ARM. Okay, Google, in a last-ditch effort to overturn a $2.6 billion EU antitrust fine, they made a last-ditch effort at Europe's top court to overturn a $2.6 billion EU antitrust fine imposed for market abuse related to its shopping service, saying that regulators failed to show that its practices were anti-competitive. You have the United Auto Workers preparing for more U.S. auto strikes. Ford Canada talks extended. All right, they're going to announce on Friday more U.S. plants to strike if no serious progress was made in talks with the Detroit 3 automakers. Now, this is a pretty big deal because if this lasts for a long time, basically this is going to affect GDP. Now, it's not going to have some big, huge effect on GDP, but this is something that could lower GDP. Okay, if they go on an extended strike for a long period of time, this could lower GDP by like 0.2, 0.3, 0.4, something like that. So it is noteworthy. All right. Now, Target, meanwhile, is going to hire 100,000 workers and offers huge discounts for its holiday season. All right, starting in October as they brace for the competitive shopping period. Now, that's probably some good hopes for them. I know a lot of people kind of canceled Target due to some things that we don't really even need to discuss because I don't care about. But, this just shows that even though you see lots of rounds of layoffs, right? In one of my last videos, we talked about lots of banks doing major layoffs. The job market still is pretty strong. Okay, it's weakening a little bit. But at the end of the day, you're seeing Target trying to hire 100,000 workers. That's very significant. Now, the building permits number, the building permits change from month over month, and the housing starts number and the housing starts change month over month. The market did not seem to like those this morning. Okay, those came out at about 8:30 and futures started dropping. So that's why we're going to take a look at the ITB right here. This is the home construction ETF. This is a weekly time frame, so a little bit more of a larger time frame. But you see here, we're breaking a major uptrend. So, one thing to consider is that home construction, home building, and kind of real estate is very, very sensitive to interest rates. Okay. And so if the Fed is going to come out hawkish, all right, this is a sector that you want to pay close attention to. There is this small little demand zone here. Okay. But basically, if ITB breaks below 79.86, flips this area to resistance from support, I can definitely see it coming down to 73.77, if not potentially even lower, right? We've already broken the major uptrend. And we're going to see, if this demand zone holds up or if we break down below there, and that's a bearish scenario, right? If Powell comes out very dovish, okay, it's very possible that this could rally from here, right? It's been a tank, it's been a powerhouse, and each time it looked like it's going to collapse, it really just consolidates sideways and continues moving up higher. Same thing with the home builders ETF. You can see each pullback has really just been a pullback to go higher. It's been very controlled selling. Also, this one recently broke here a recent uptrend, right? We were looking, it was starting to squeeze. You're going to see if it was going to break to the upside or to the downside. It's already broken below 79.06. Below 79.06, I think this can come down to 76.28 and potentially even 73.14. Those are very important, right? The XHB, the home builders, home construction, those are what I consider a part of the 4 pillars. And so we're going to break down the 4 pillars really quickly for you guys. We have XLK, this is technology. We have SMH, this is your semiconductor ETF. You have XLI, industrials, and then you have XHB. These 4 are very important to the market and let you know how the market is doing, okay? XLK obviously being tech, the powerhouse of the stock market, right? If tech is performing well, then the S&P 500 and the NASDAQ respectively are going to be performing well in a typical environment. And really all we're seeing is that they're battling overhead supply. Each one is stuck battling overhead supply, right? You look at XLK, resistance, resistance, right? Semiconductors, resistance, resistance, home builders, resistance, resistance, okay? And then industrials, resistance, resistance, right? Now, XLI is already broken through its major support level here of 105.32. If we see home builders do the same, XHB, and for this chart, I have it right around 76.89 is the rough area. That's going to be a bad sign for the market. All right, semiconductors 142.59. That's the big level here. And for XLK, 162.69. All right, if we can maintain above all of these, ultimately we're really just going to chop sideways in the market overall until we get clear direction, right? And what I mean by clear direction is when we see all 4 of the 4 pillars breaking out to the upside, then we're going to have clear market direction to the upside. If we see all four of these breaking down to the downside, then we're going to have, clear basically direction to the downside. Now, as I mentioned, XLI breaking down to the downside. This is something to be cautious of for, the other four pillars, right? So we have one of the four pillars breaking through its major level of support, right? If we see the home builders break through its major level of support, it could be a warning sign that potentially the market is going to start pulling back even more, and that we're going to see tech and semiconductors continue to fall as well. All right, so keep that in mind. Another ETF and sector basically is the biotech sector. This is arguably the most risk-on asset class in the market. Biotech often is profitless companies that people are investing in, hoping that one day they have a breakthrough, a technological breakthrough with a drug or a patent or something like that, new medicine. And we see it's very close. Okay, it's squeezing here, right? Could break out to the upside, could break down to the downside. At the moment, it's testing the bottom here. So if you're bullish on this is not a bad area to go long, right? And you can have a very defined, risk to reward ratio. Okay, if you take a look, you're risking basically a few dollars here, and then you'd be targeting, somewhere up here to the upside. So, again, from a risk to reward standpoint, you're risking about this much to make this much, right? So it doesn't make, a bad decision here, but to me, it looks like it's on the verge of potentially breaking down. Now, if it does break down, 121.54 is going to be a key area to pay attention to. If we can hold support there, then you would look for this to be a classic look below and fail, and you would actually be targeting the upper end of the range back towards 132.21. This is the oil and gas equipment ETF. This is XES. As I mentioned, this thing looks very, very strong. Okay, you can see a consistent uptrend going from $25 all the way up to $100 here. And if we can break out and basically hold above 98.84, it's very possible that this ETF continues to go up to 106.27 and potentially even 117. Now, there's a lot of work that needs to be done. Energy prices, futures, crude oil futures, those have been very bullish, but that would need to maintain, right? And it's going to take a lot of strength for those to continue climbing higher. They've been on a tremendous rally, and I do think it's possible they can rally more. But really, I'm actually looking for when is the time to potentially start shorting energy, right? So for right now, still watching. As it does seem that there's potential for it to continue climbing. This is that S&P 500 futures seasonality projection. We can see here again, it's kind of suggesting that we sell off heading into October. October is also kind of a rough month for the stock market sometimes. So we'll see how October plays out. But as far as September goes, it's showing a drop for the rest of September here. Same thing with the NASDAQ futures. Okay, so it looks like the S&P and tech potentially could sell off, as part of seasonality. But if you notice, it's very choppy in here. Okay, so it's very easy to get fooled, and you don't have to use seasonality as the main factor, right? This is just something to consider. This is just general seasonality. This isn't specific pre-election year seasonality. Okay, the way that this indicator is actually set up here. And right here, the next chart we're looking at, this is going to be TLT on the top. And then this is going to be the S&P 500 SPX ETF, okay, the index actually. And basically what we're looking at is anytime there's been divergences, TLT has been a leading indicator. Here, TLT is going lower, right? Here, S&P 500 is going higher, suggesting that the S&P should go down if TLT is a leading indicator. We can see that happens. Again, we see that same development here with TLT making a downtrend of lower highs. Here, S&P 500 making higher highs, suggests that the S&P should have a pullback. And sure enough, we end up getting that pullback. And here, most recently, yet again, we're seeing another divergence. S&P 500 making slightly higher lows here. Meanwhile, TLT is actually making slightly lower lows here. Again, it's suggesting that the S&P 500 could be due for a pullback, okay, if TLT is going to be continue to be a leading indicator. Now, oftentimes these last, a decent amount of time, right? This is about 3 or 4 months right here. This is about 2 to 3 months right here. Okay, so, being that this is only around a half a month of a divergence here, it may take some time for this to play out and develop, and we may continue to see these two diverge. This is the same thing, but instead of TLT, we're actually looking at the TIPS. These are Treasury inflation protected securities, okay? And then you have the NASDAQ 100 index. Again, seeing these divergences between them, oftentimes these can be leading indicators for the indexes. And we see the NASDAQ pull back, we see the NASDAQ pull back. And here we're actually seeing the TIPS ETF go up, okay? And we're seeing the NASDAQ make slightly lower lows. So really interesting here. I'm going to be interested to see, is this actually going to be an indicator that, the NASDAQ 100 and tech could actually be due for a bounce sometime in the future if we continue to see the TIPS ETF rise? Now, of course, we're going to talk about TLT, and I mentioned how I think it's going to be range bound. Here, we basically have roughly 96.5 to 97.5 is going to be your rough range of overhead supply. And then here we have 95 to about 94.25. And then down here, we have 93 down to about 92.25. That right now, I don't know what exactly the range is going to be, if we're just going to stay in this lower range or if we're going to stay in the larger range, or maybe we stay in the upwards half of this. But I think it's a very big possible scenario that TLT really just stays range bound until we really get the next big move in rates, okay, from the Fed, that is. Now, what I mean by that is, if the Fed just keeps pausing, all right, interest rates, in my opinion, are just going to kind of go sideways, right? We're not going to see a dramatic plunge in treasury yields, okay, causing a rise in TLT, just if the Fed continues to pause, right? They've already been pausing. And the big concern is whether they're going to continue raising rates. If they continue raising rates, it's very possible TLT breaks these lows over here and heads down to a new low. And that would be my son Damon here. As I told you guys, I did recently just have another son. He's a 2-month-old. Just giving a shout out to you guys. But yeah, so that's really what I think TLT is going to do. Honestly, it's going to stuck range bound. You're going to see moves to the upside and downside. It's going to provide really good trading opportunities if you're an options trader for trades on TLT, or maybe if you like trading leveraged ETFs, you can look at TMF and TMV. But really, the big thing is, are we going to break the lows, right? And for us to break the lows, we need to see more of a hawkish Powell. Okay, we need to see inflation continue to rise. Inflation has kind of bottomed out and is starting to tick back up again. If we see a consistent trend of that, then it's very possible that's how TLT breaks its lows. Over here we have the 10-year yield that I was mentioning. Old support becomes new resistance, and we're breaking out past that level here. This could be a fake out. Okay, it's very possible this could be a fake out and turn into a double top, but at the moment, I think it's very possible for these to really just consolidate, and maybe go up and down, right around that 4.25 level, and just go down to 4%, 4.5, and really just consolidate through here until we get the next major decision, right? And ultimately, that's going to be rate cuts. If we get the rate cuts, that's when you're going to start to see yields go down. That's when you're going to start to see things like TLT go up. And I think the best thing to do is have patience right now. There's no need to rush and go all in on TLT right now. I have a video I'm going to be creating here in the future, very shortly, actually going over some really good strategies that you guys can implement to generate yield on top of the yield that you get already on top of this using options. Okay, so stay tuned for that video. One thing I do want to mention is that on all of these yield charts we're about to go over, there's a clear divergence, higher highs right here, lower highs right here. This is a bearish divergence indicating that you could possibly drop down lower. So I would definitely be on the lookout for that. We have the 20-year treasury yield here, as I mentioned, breaking out. Okay, this one hasn't started creating higher highs, so we don't necessarily have a bearish divergence here. But on the 30-year as well, you can see making higher highs and then making lower highs here on the RSI. And this is a major reason why I say you don't have to rush into TLT. When you look at the 30-year treasury yield, look at this, basically 2-decade long, right? This is the year 2000 right here, 2-decade long downtrend that we've broken. And so, it's very possible that this becomes a little bit more of the new normal and rates stay more elevated than they have, right? And maybe they don't continue this 2-decade long downtrend. Maybe they just really start to chop sideways, right? And it could be a wide range, from 3% to 4.5. It doesn't mean that interest rates always have to go, and continue this 2-decade long downtrend. They don't have to come back down to 2% here on the 30-year. They don't have to come back down to 1.5. Right, that's not something that necessarily I would be betting on, basically at the moment in this environment. That pretty much wraps up today's video. Okay, smash the like button, subscribe to the channel. Don't forget to sign up for that free newsletter. Getting free trade ideas and really good content delivered straight to your inbox every single week. And you can check out the Ko-Fi page if you guys ever want to, request a one-on-one session with me. We do those in 30-minute sessions and 1-hour sessions. I do those every single week. And you can also request a specific video for YouTube if you guys would like, whatever topic you want, whether it's a strategy, whether it's some, specific stocks or ETFs, things like that. Feel free to let me know in the comment section down below.